Hello folks, this is Les Goldstein, President of Personal Financial Strategies Incorporated here in beautiful Park Ridge, Illinois, with our January 2015 Educational Economic Update. In this month's video, we talk about some of the major economic events that occurred last month to give you some insight into what they mean for you as an investor. Please stay tuned at the end of this conversation for a required disclosure statement. January was a very volatile month for stocks, largely because of events overseas. Markets grappled with the realization that although the U.S. economy is doing well, global growth is in trouble. Let's talk about what happened last month. Oil prices continued to dominate economic conversations. Oil continued its slide, and by the end of January had dropped 60% since last June. Though low oil and gas prices are a net positive for consumers at the pump, analysts worry that oil prices are a symptom of weakening economic growth. And the global growth picture is weak. Both the International Monetary Fund and the World Bank cut their estimates for global economic demand in 2015. Central banks around the world are also worried and responded with some significant policy moves. While the U.S. Federal Reserve is thinking about raising interest rates, the European Central Bank announced its own bond buying program, hoping that this will boost growth in Europe. The Bank of Canada voted to drop interest rates to help fight the effects of oil prices on its exports. So, what does all of this mean to you? Well, it means, first of all, that the U.S. and the rest of the world are on diverging paths. We're moving towards healthy economic growth, while many economies overseas are struggling. Will a strong U.S. economy be enough to pull the world out of a slump? That's the big question. On the domestic side, the news is brighter. We got our first look at fourth quarter gross domestic product. The first estimate showed that GDP grew 2.6%, lower than we had hoped. However, consumer spending was higher than expected, indicating that Americans are still buying. While 2.6% growth is a big drop after the 5% growth we saw in the third quarter of 2014, a lot of economic data is yet to be analyzed, and we can hope for upward revisions in the months to come. Fourth quarter earnings also started last month, and the news so far is in line with previous quarters. Not great, but not bad. Looking at reports from 188 of the 500 S&P 500 companies, earnings are up 6.6% over fourth quarter 2013. However, total revenues are up just 2.4%, indicating that many companies are still struggling with low demand. But keep in mind that these numbers are aggregates, and there are a lot of individual success stories in each sector. Part of what we do for clients is look for those opportunities for growth in every market environment. Looking ahead, we expect to see a lot of volatility as investors adapt to the growing divergence between the U.S. and everywhere else. While turbulent stock and bond markets can be stressful, keep in mind that they often present opportunities. We are always monitoring markets and keeping our eyes open for these opportunities. Well, folks, that's it for this January 2015 Educational Economic Update. As always, if you have any questions or concerns about what we've discussed and how it impacts you, please call us at 847-268-3670. That's 847-268-3670. And for those of you looking for investment opportunities and alternatives, we are having a luncheon and a dinner on February 26th, coming up in about 10 days from now. So, please call us if you'd like to learn more about these two real estate conversations we will be having on February 26th. Call Ms. Sherry Adelson to learn more, 847-268-3670. Her extension is 100. Now, for the required economic disclosure statement. While we believe that the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or the solicitation for the purchase or sale of any security. Please talk to us before making any investment decision. Thank you and have a wonderful February 2015.